So Mike, my sisters are in their mid-40s. If they wanted to start doing this real estate investing, it's too late for them, right? Like it's already too far gone.
No, I think in the 40s is a perfect time. We have people 50, 55 even getting into real estate investing because they're worried about creating the wealth for their retirement. They don't think Social Security is going to be around. They don't know about retirement, all those other things. So they want another pocket of money that gives them options. And the best thing about this is it gives them options. So let's just say someone's 50 years old and they're going to want to build a better retirement. This gives them so many options because it builds wealth, brings in income. Let's just look at an example of someone who's 50 years old.
Yeah. Walk me through this as if I was 50 and I'm like, okay, can I actually get started? What's your plan for me as a 50-year-old?
So let's just say you're 50 and our retirement age is 65. So what we do is we come in and we say, okay, let's look at this realistic. You could buy 2 properties in 1 year to get it going. Year 2, let's add another 3 properties. And then you really got this thing going. So now you add 5 more rentals. So in 3 years, you've accumulated 10 properties. And if we use just a common number, like it's a $250,000 value, and we use a number that is below what the national average is. The national average over the last 30 years is real estate goes up 4% per year. But let's just use 3%. And you're buying those. If you buy those 10 properties and you buy them with BRRRR, we've talked about BRRRR before, but that is buying undervalued properties, fixing them up, getting them refinanced, typically at 75%. That's the other trick about starting later, is not using your own money, not using your retirement, is using the strategies that are out there to buy these properties. We'll go and we'll throw the numbers out there, but if you buy 2 properties your first year, 3 properties your next year, so you can start ramping it up, at the end of 3 years, you have over $600,000 in equity that you've built for yourself.
And that's at that 3% rate you're talking about?
That's just building it at 3%, but you're also using BRRRR, so you bought them under market.
Okay.
So those 2 strategies put together, you've created just in 3 years more than most people have for retirement. But that's not where we're going with this. It's taking those 10 properties and looking long-term. I'm 50 years old. What can I do at 65?
Dang, okay, so we're only right now at 53.
Yeah, we're at 53, and you've already accumulated over $600,000
and that's with how many
net worth with 10.
With 10 properties.
10 properties that are valued at $250,000.
Okay.
So in a lot of places in the U.S., if you're using BRRRR, you're going to be a lot higher than that.
Gotcha. So you're estimating conservatively both on the properties and what part of the country you're in and on the rates. Like instead of the 4% average, you're doing 3%.
Yeah, because different parts of the country, the appreciation on real estate is a little bit different. But the average is 4%, so let's use 3%. And if I'm 50 and I'm looking at what are some options when I'm 65, so I buy 10 properties. I take them as rentals. In this case, we're going to use an example of someone not needing the income from between 50 and 65.
Gotcha.
So we have 10 properties, and we're going to say in these 10 properties, we're going to bring in $300 more per month than we're paying out. And our goal is to think about retirement, think about building assets. So we take that extra $300 per property. We take property number 1 and we start paying down on it. In less than 5 years in some that you actually pay off that first property. Then you take all that money and you pay off the next one and then the third one. So by the time those 15 years are up and you're at 65 now, you own 3 properties free and clear. You still have 7 other ones that have built in equity. And those 3 properties now are worth about $400,000 each.
And you started 15 years ago at 250.
Yeah.
And now they're all...
They've appreciated up to about $389,000 using a 3%.
Gosh. So
just with those 3 properties, now you have almost a $1.2 million asset. Plus you have 7 other properties that are almost halfway paid off, depending on what year you have. So,
dang, yeah, because 400K times 3, it's like almost 1.2 million in what you own free and clear.
Yeah.
And if you wanted to sell all the others at that point, you would still make some profit, right?
So when you're 65 now, you have some options. And that's all real people want, is some options and some security. So when you're 65, you could just say, hey, I've paid these 3 down. I could keep them all. And now I have rents that are free and clear from these 2 besides taxes and insurance. And I have the other properties. Let's just keep all the numbers in today. We know rents are going to appreciate. We know other things will appreciate. But if you just kept those and we said that these 3 properties were bringing in $2,100 a month today, fast forward 15 years, and those properties are still bringing in $2,100, we know it'll be more. But that's $6,300 per month in income if you want it that way.
Yeah, okay. And so you do that over 15 years. I don't know what that would be, but that's a lot of money.
Yeah. So you have that. So that can supplement Social Security if it's still around, supplement your retirement. Or you can take a new loan on those 3 properties or take out a loan on one of them for now they're worth $400,000, take out 70%, $280,000, and you can live on that money. That could supplement your retirement for the next 3 years. Or you could sell one of those properties. One property every 3 years gets you, starting at 65, gets you to 95, using the proceeds from that money to supplement your income. Yes, you're going to pay some taxes unless you do a house hack and move into a rental, recover if the tax breaks are still there. But at 50, if you're starting out and you just wanted to get to build some wealth, some security, really have some options. Because at 65, if someone did this and they started at 40, they have those options. The income is there if they want to keep that going, because every year that they're going to keep these properties, their net worth is going up. Their income's probably going up. Refinance, we didn't even talk about refinance. Rates are high right now, but what if they go down 2 points in the future and you refinance these? That just means your cash flow's gone up. You pay these off faster. But even if you just paid off those 3 and let the other 7 go to maturity, you're going to be able to live off those properties by either renting them, selling them, or refinancing them and supplement your income or just live off of it. That is 10 properties that, using 3%, if you kept them, year 30, they're going to be worth a little over $600,000 each. In 30 years, if you add all 10 of them, they all be paid off. There's $6 million there that in today's money is a lot of money. And we know that things will increase with inflation and everything, so will rent. But, financing could come down. It just gives you the options, even at 50, to give you more security, more options when you're 65 or 70 for the next 20 to 25 years, that you're not going to run out of money if you did this and did it right.
Yeah, it sounds like it. Like you're saying, I imagine $6 million is going to be less than it is now, but it's still going to be a lot.
Yeah.
Like, barring total apocalypse, I think $6 million is enough to retire on in 15 years. I would imagine. Is that what you agree?
And I look at it like this. It's either have that $6 million or don't. So
right, yeah.
The $6 million might only be worth in today's money $3 million, or it could be worth more because housing, who knows where it's going to be.
Yeah.
But it's going to put you in a better position. It's going to give you more options by starting now. And the beautiful thing is, if you start now and you have the income not to worry about taking any money out of these, and this to build this like a 401k, it keeps growing, it keeps growing, it keeps growing. There's going to be some expenses and there's going to be some of these things. But rents are also going to increase. There's other items that are going to come up that's going to be a benefit to you too. In general terms, if you go out and buy 10 properties right now with BRRRR and you take care of them during this time and you pay them down, in 15 years, you're going to have a lot of options. In 30 years, you're going to have a pretty good life because hopefully you've saved some money. Hopefully there's some Social Security left. Maybe you've put some money into your real 401k, but this is going to give you some options. Add in a layer that maybe you buy some of these properties in nice areas that you want to go visit, becomes a business write-off, not your vacation. So there's options that you can do even starting at 50. 44, whatever, 45 is even better.
Okay. Can they reach directly out to you if somebody's watching this and is like, I'm very interested, want to learn more?
Yeah.
I'm just curious, right?
And subscribe, look at this, because we're going to come up with the next one. Like, what if someone wants to just use the income? Maybe they just need income. So let's look at this same scenario of someone using income on another example. And we're going to put the numbers here that we used below just so people can look and see what we're talking about, buying them over 3 years, rates, all that kind of stuff. So that the numbers are there. But just remember, this is a general numbers here. It can be a lot better, but it shouldn't be any worse unless you're not taking care of stuff and doing anything. But if you want options, if you want to get moving on this, if you want to look at 100% BRRRR financing, reach out to me, Mike, at The Cashflow Company. We'd be glad to help, or just check out our website, thecashflowcompany.com, and there's a quick QA thing there. You could send us a quick inquiry and see what you have and how we can help you. But I just think people need options, and the older you get, it gets closer to retirement. You have to maybe start doing some of these things because time is ticking and you need some options for retirement.
And I'm hearing that it's not too late.
Besides working at Walmart or wherever,
100%, yeah. What's that? I have no idea who the artist is, and I'm so sorry to do this, but the song that goes, "It's not too late, it's never too late," that's in my head because that's what you're saying. It's
exactly.
never too late.
It's never too late. It's actually perfect timing for most of these people.
Awesome. Thanks, Mike.
Thanks, Michael.